Alright guys, brace for impact. This is going to be a good one and even I am surprised about what is happening. I had to double check the data just to be sure. Normally I would be saying that China is dumping US bonds and that would be true. The latest treasury data is out and it confirms what we have been saying forever. China's holdings of treasuries have dropped to $730 billion and that's the lowest point since December 2008 when it actually hit 727 billion. And by now we know the drill, don't we? China is either selling off their holdings or letting the bonds mature. Either way, the proceeds are not being funneled back into US debt. It's heading to Chinese industries, investing in bricks, or simply buying up gold. Beijing understands the grand game, putting upwards pressure on US yields to teach Trump a lesson. Also, it doesn't really make sense to fund your own economic containment, does it? But what's really surprising is a US ally calling it quits. It's a core G7 member. It really shows how damaging Trump's trade war is turning out. It's backfiring directly on the US financial system. Canada is perhaps the biggest seller of US bonds in July, and this is data from the US Treasury itself. In July, Canada's holdings of US Treasuries fell by an incredible $57 billion. That's even more than China's biggest single month dump a year earlier. And no, it's not just because of the currency effect. And $50 billion in bonds didn't just magically mature in just 1 month. There was some selling pressure, and Canada didn't pile more of their reserves into US debt. The Canadians are indeed moving away from dollar assets. Now, this is earth shattering. It's one thing for BRICS to move away from the dollar. It's a given that China and Russia, they are done with US Treasury bonds. They don't want the counterparty risk, all those headaches, especially potential confiscation. But why is Canada moving away? Well, maybe it's because they're sick and tired of Trump joking about taking over the entire continent. Trump still wants Canada to be the 51st state of the US.
And I'm running out of time, but this is, many respects, the most important.
The
what
merger
you created
of Canada
No,
and the
what
United
you
States.
have created.
I'm only kidding.
That wasn't where I was going.
Now, this joke has gone from distasteful to stale and boring, but it still remains that Trump wants Canada's economic benefits for the US. However, the Canadians are starting to trade elsewhere. It's going to be a really slow process. Too much of Canada's infrastructure and trade is still integrated with the US. But Trump's tariff war is managing to tear things apart. In 2025, Canada's total exports to the US thus far dropped by 2%, which is very significant. And this resulted in a $5 billion hit to exporters in the country. Despite any trade agreements, Canada is taking an economic blow in this trade war. However, the trends are starting to change. Just like Europe and other G7 allies, Canada has no choice but to adapt. Exports to the US will continue to get crushed. Secondly, would you import the goods of someone hell bent on reshoring your industries? I don't think so. You'll be funding your own economic containment. It gets even more interesting when we look at Canada's trade with China. Canadian exports to China in Q2 hit nearly $16 billion. That's a significant increase from Q2 last year at only $14.2 billion. That's a 6% increase. Major export items include copper ore and crude petroleum or crude oil. Beijing is not getting their commodities or energy from the US anymore. They are getting their supply from Canada instead. And we have said many months back that Trump's trade war will only benefit Chinese exports. Yes, China won't be able to sell as much stuff to the US, that is true. But other countries, especially US allies, they have no choice but to import goods from China. When the US puts up a 20% trade barrier, countries have to scramble around to bring down their cost of production. And the only place left is the world's factory. And Canada's data once again confirms this. In the first half of 2025, Canada's imports from China flew to the moon, a 7% increase in Q1 and an 11.9% increase in Q2. This is not a coincidence, it's a direct result of the US trade war. And pray tell, what currency do you think Chinese exporters want for their products? Do they want US dollars that have lost 10% of their value in 6 months? No, they will want their own local currency whose value is relatively stable. Chinese exporters would rather give discounts for the RMB than trade in dollars. And for Canada, this reduces the incentives to hold dollars. This is Sesame Street, guys. 1 plus 1 equals 2. It doesn't get any more complex than this. Even Besson or Lutnick can figure this one out. And that's why the propensity of Canada to hold US treasuries is dropping. Now, I'm not saying it will drop to zero tomorrow, but it won't be as high as before. Now, it's not just me saying this. Ray Dalio and Ken Griffin of Citadel, they are sounding the alarm bells as well. And now Canada's own pension fund is throwing down the gauntlet as well. Now, this is a fund that manages over $700 billion, and where they allocate money is kind of important. And according to them, US treasuries are at risk of losing safe haven status thanks to the fiscal stress. And that's a fancy way of saying the US keeps spending beyond their means. The fund is worried that US bonds are looking more and more like a risky asset. And this should scare Scott Besson to the bones. If US allies now are wondering about buying treasuries, a huge bid in the market would slowly start to disappear. So will more G7 governments move away from US bonds? Will Western pension funds start to move away from American debt holdings? Now make no mistake, if you buy a US bond, you are indirectly funding Trump's global trade war. At this moment in time, Japan holds the most amount of US bonds. The next biggest investor is the UK. Their holdings have exceeded China back in March. And this is bad for Besson. It means US borrowing is now concentrated dangerously within a few allied countries. Confiscating Russian assets is one thing, but is hammering allies who hold your debt the smartest move today? Now, maybe Trump can't see it, but the world is losing an extreme amount of trust in the reserve currency. It can be weaponized, and Washington clearly doesn't care about its underlying value as well. And here's a very effective summary of the US that is sliding into economic chaos one day at a time. And all of this signal currency debasement down the road. The US government is borrowing over $2 trillion per year to run the economy. And eventually this will reach 3 trillion or even 4 trillion as things get progressively worse. During the lockdowns, the US printed 4 trillion to bail out everyone. Now, if the trade war collapses the economy, do you think it will just be $4 trillion? Trump will need to save both the consumer and his industries at the same time. The dollar has also lost 25% of its value in just 2 years. Guys, dollar cycles are very long, and trying to reverse it requires a fundamental shift. And the only pivot possible to dollar strength is to stop the trade war. How else are you going to drive demand for the reserve currency? Every single other action points to currency debasement. And that's why, ladies and gentlemen, we are headed towards a financial reset. Now, gold is leading the way, and hitting 4 grand is a signal. There's no turning back, folks. Even the big banks, they can't keep up with this big revaluation. Prices have surged by over 50%, and everyone is stunned by how quickly this has happened. Even Goldman has now hiked their gold target to $4,900 per ounce by December 2026, which means another 20% or 22% upside or so from current levels. And their reasoning is very simple. Central bank buying is not going to stop, and Western ETFs will bridge the gap. Sooner or later, Western investors, they'll be forced to join the rally or be left behind. Now, there's a reason why this is a financial reset. Since the time of Alan Greenspan, the price of gold has been a very sensitive topic. A rising gold price is a mirror to the dollar, which is wilting away faster than ever before. And until 2025, we haven't really seen a true gold rally. There's always been a ceiling that's capping prices. However, we are now in uncharted territory. Gold prices have exceeded the previous inflation adjusted high back in 1980, which means we have no idea how high gold can go. It all depends on how quickly the value of the dollar erodes. All the central banks with ample amounts of gold, they are now sitting pretty, they are sitting on a big pile of gains. And those holding only treasury bonds, they are now foaming at the mouth. This could be the start of a big financial reset. There'll be winners, and guys, there's going to be losers as well. Now, a reset not just in non-dollar trade, that's already going on for many years, but in how global assets are going to move. The old model of holding debt of other countries is broken. It's a race to the bottom because currency debasement almost always exceeds the yield that you get. Now, take the dollar for example. Who really cares that it is yielding 4% when real inflation is much higher than that? And its values also keeps plunging down. It's a double whammy here, guys. Now, Goldman paints for us a very vivid picture of how this reset will unfold. This is just the beginning, but there are two big fundamental drivers that will push gold demand even further. Now, central bank buying would average 70 to 80 tons from now until the end of 2026, and that will push prices up by 19 percentage points. In other words, US bonds will be shunned in favor of gold. Meanwhile, Western ETF holdings will rise as the Federal Reserve cuts rates by 100 points by the middle of 2026. So, four more rate cuts are coming, and it could put even more pressure on dollar strength. Western demand itself could push prices up by 5%. Essentially, investors in the US and Europe will be cornered to buy gold because where else can they go? Even in the US, a falling dollar still means higher import prices. There's simply no escaping this. Now, back in April, Scott Bessent made a very bold claim that the tariff war is a move to set a strong foundations for US capital markets. But is that really the case? Now, here's the recap.
Worry you at all that investors seem to be losing confidence in the U.S.?
Well, again, you're saying losing confidence, and I don't think that this is necessarily losing confidence. We're in this for the long term, and the important thing is that we are setting the fundamentals for a strong dollar, a strong economy, strong stock market, and for investors to know that the U.S. government bond market is the safest and soundest in the world.
This is the problem with a highly financialized economy. The US needs to keep the wheels of their debt market spinning. The endless borrowing cannot afford to stop, or everything starts collapsing. So if you think 4 grand gold, $4,000 gold is shocking, wait until the entire house of cards comes falling down. And here's how bad things can get. In 10 years, the US national debt will hit $59 trillion. By 2048, it'll reach 100 trillion. 30 years from now, we will be at 150 trillion. And the graph keeps getting exponentially worse. What happens if countries, even the G7, decides to stop lending money to the US? Then everything will break down, and the only reasonable conclusion left is money printing by Washington. So brace for impact, guys. Gold at 4 grand is just the start. It's only the appetizer. The main event hasn't even started yet, far from it. But let me know what you think. Will Canada continue dumping their treasury bond holdings? And has the financial reset begun? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this horrific economic apocalypse.